The PSE index clings to the 8,000 mark as investors await second quarter GDP figures, with consensus pegging it to a 6.4% growth at least. Uber gets a second chance to appeal its suspension after its top regional executive apologized to the LTFRB. JG Summit expects earnings growth to flatline this year as the airline and food units weigh down the rest of the group. And Shakey's opens its 200th store with a keen eye towards hitting 500 over the next 5 years. Good morning, I'm Regina Lay. This is Starting Gate. Another President Duterte appointee failed to hurdle the confirmation process. The Commission on Appointments ruled that Judy Taguiwalo is not fit to be Social Welfare Secretary. Mayan Los Baños has the rest of the story.
I'm in good company. I think to be rejected, like Gina Lopez, is a badge of honor for us. Kasi never kami masabi na corrupt kami.
Judy Taguiwalo walked out of the Senate Hall like a rock star on Wednesday, still pumped up despite getting rejected as Social Welfare Secretary. Her supporters welcomed her with open arms, some even comforting her with songs. After 2 hours of grilling, members of the Commission Appointments took their discussion behind closed doors. Because she had already been bypassed twice, the bicameral committee were forced to put it to a vote.
I stand before this august chamber as the chairman of the Committee on Labor, Employment, and Social Welfare to move for the Commission on Appointments to reject the ad interim appointment of Judy Marigomen Taguiwalo as Secretary of the Department of Social Welfare and Development.
Davao Oriental Representative Joel Almario later said 13 of the CA members thought Taguiwalo was unfit for the position. Afterwards, some lawmakers were quick to claim that they voted in favor of the former DSWD chief.
But the only thing in her heart was to help the poor. I truly believe that she had the formula that could help us get rid of poverty in the countryside. Because of this, I vote for her confirmation.
She's a hard-working person with integrity, and I had hoped that we could have her in the cabinet.
Because it was all done through secret ballot, there's no way of verifying how the members actually voted and why they decided that way. But there were some sticking points during the deliberations. Senator Franklin Drilon grilled her about the conditional cash transfer program under the tax reform bill. Under this scheme, 10 million of the poorest Filipinos will receive 200 pesos monthly for a year to help them hedge against rising oil and food prices. But Taguiwalo admitted she wasn't confident about implementing this program.
If it is not clear with you, madam, then the whole program will collapse because you are the ones, you have the expertise, you have the structure to implement it, and you're saying that it is not clear to you?
I don't think so. I think in the first place, the bill has not been passed yet. If the law is passed, the department will be able to administer the cash transfer for the 4.4 million current Pantawid beneficiaries. So it's going to be a top-up. But the remaining 5.6 million, we will not be able to handle. Excise tax, matatamaan sila kasi sumasakay sila, bumibili sila. So yun ang pinaabot natin na may epekto ito sa mahihirap. At kaya ba yan solusyonan ng 200 pesos cash transfer?
But in a statement, the Liberal Party says all 4 of their members, including Drilon, voted for her appointment. The rejected secretary herself thinks she didn't make the cut because of her leftist past and her political views, particularly against the issue of pork barrel. Taguiwalo drew ire when she accused lawmakers of trying to influence the DSWD's projects and its beneficiaries to make it seem like the effort was funded through their Priority Development Assistance Funds or PDAF.
Hindi ho yan ayon sa batas, and I don't want to violate the law. But if you want us to work together, because I know may mga mahihirap din sa inyong distrito, we can work together.
Malacanang says it is saddened by her rejection and there's no word yet on who might be tapped to take her place. After Perfecto Yasay and Gina Lopez, Judy Taguiwalo is the third Duterte appointee to get axed by the commission appointment. Mayan Los Baños, Bloomberg TV Philippines.
Well, today's a big day with second quarter GDP figures due at 10 a.m. and markets will certainly be waiting to see if the economy can bounce back from its first quarter miss. And JP joins us now with the preview. JP, the question today is simple. How might investors react to the GDP data?
Well, Reg, the simple answer is it depends on what the figure is later at 10 a.m. Now, median estimates of economists surveyed by Bloomberg peg second quarter GDP growing by about 6.4%. That's similar to the first quarter's growth rate, but significantly lower than the DOF's own bullish estimate of 7 to 7.2%. Now, as mentioned, first quarter GDP missed estimates by about 0.3% you're going to see here. And that was the first time quarterly GDP missed estimates in about 5 quarters. Now, the markets on that day actually did not respond very favorably to that miss. Recall that by the end of that trading session on about May 18, the main index slipped by nearly 0.9%. So today's GDP release will be very closely watched. It also comes at a tricky time for the PSE. Remember that the main index has stayed above 8,000 for the last 2 days. But 8,000, as we know, has proven to be a tough resistance level to crack. And really, a GDP miss could trigger a pullback. But conversely, a decent figure could also bring the profit takers out early. Now, we'll be talking to an equities trader later on for more on how the markets might respond. But the more pressing issue might be comments made by DOF Secretary Carlos Dominguez. And this pertains to that infrastructure push which has captured the market's imagination for the last 14 months. That's the government may have to cut the number of infrastructure projects it has by more than half should the tax reform bills not pass Senate. Dominguez is expressing anxiety, it seems, over the measure, and whether the markets get infected by this is anyone's guess. Remember, tax reforms are intended to fund the infrastructure push, which in turn is seen as key to sustaining the Philippine status as one of Asia's the fastest growing economies, and for the PSE to finally crack that tough 8,000 resistance level we're talking about. And failure to pass these may affect the economic outlook for the country for the worse. Now, so there's a lot to digest, it seems, but before I move on to other parts of the markets, keep a close eye in the equity space on the mining and the oil sector, because it came from out of nowhere, driving the PSE's rise on Wednesday. With the main index up by almost 0.5%, you'll see there by the blue line, the miners decided to blow that gain out of the water by rising more than 2%. We'll be taking a closer look at what's got into the coffee of the mining sector later on as well. But for now, second quarter GDP figures front and center for the markets this Thursday.
Well, we definitely have a full plate today, James, but I do need to ask you about one other thing. The peso, we are seeing it weaken, especially over the last few trading sessions, going past 51 at this stage. How's the local unit doing now?
Let's take a look at that actually right now. It's a very good question and also timely because we know Forex markets are very sensitive to these economic releases such as GDP. You're going to see the peso's August slump, and this just really tracks how it's done since August. You'll see that big fall from grace from just over 50 pesos to $1 to about 51.26. Today, it's starting to show just a little bit of a rebound. It seems there's a bit of, a little bit of optimism or hope that the GDP figures may show a bit of a recovery and really boost the peso. But again, this slump, which has it holding on to its title as Asia's worst performing currency, is pretty stark also. Remember also that when you look at another driver for the peso, net foreign buying, although it is continuing to sustain itself on the local bourse, you're going to see that foreign fund flows have actually started to slow down just a little bit. They're still up there, but you're going to see that the nubs or the inflows are starting to get smaller and smaller by the day. So there's not a ton of support, it seems, from the peso here. How far might it go? Well, it's really anyone's guess, but the BSP isn't worried. A lot of officials at the Bangko Sentral have said that they think that there is no magical number really for the peso. And it really just has to respond to some of these market conditions and these trends such as this growing trade deficit to fund that infrastructure push.
BSP isn't worried.
Respond to some of these market conditions and these trends such as this growing trade market to fund that infrastructure push.
BSP isn't worried.
Respond to some of these market conditions and these trends such as this growing trade market to fund that infrastructure push.
BSP isn't worried.
Respond to some of these market conditions and these trends growing trade market to
fund that infrastructure push.
Well, let's get you up to speed now on other headlines. President Duterte wants to sell the mile-long property by the government to Sunbar Realty. of the Prieto and Rufino families, also the owners of the Philippine Daily Inquirer. Duterte has repeatedly blasted Sunvar for allegedly non-payment of taxes and the Inquirer for what he says is slanted reporting.
Pay your correct taxes and return all the properties of the people. So yung Sunbar na yan, I'm selling it. Bidding yan. You want that piece of property, I'm putting you notice. I'm selling that so that I can build more houses for the soldiers.
In a statement, Sunbar says that it will comply with the court order to vacate the property. The original lease agreement expired all the way back in 2002, but Sunbar said it paid almost 17 million pesos in advanced rentals with the understanding that the lease will expire in 2027. Ayala and SM may have to tweak their joint proposal for the C3 elevated expressway from Manila to Pasay. Public Works Secretary Mark Villar says there might be some alignment issues with other projects, especially that the department also has its own C3 project in Makati. The Philippine Star is reporting that the DPWH will ask Ayala and SM to submit a full-blown feasibility study for the 25 billion peso unsolicited project. And President Duterte has given a go signal to pursue joint exploration with China. That confirmation came from none other than Foreign Affairs Secretary Alan Peter Cayetano, as reported by the Manila Bulletin. The diplomat said that the Philippines will not lose its sovereign rights, and he's now consulting the Energy Department and lawyers to come up with technical and legal frameworks. Cayetano also said that Duterte gave the go signal because the Malampaya gas field will dry up in less than a decade. PXP Energy, which has a service contract to explore in Recto Bank, earlier said that it recently revived talks with potential Chinese partners. In its latest face-off with the LTFRB, Uber brought in the big guns to apologize for what it called a misunderstanding over the moratorium on new driver applications. Gerard De La Peña reports.
The nearly 4-hour closed-door meeting between officials of Uber, the LTFRB, and the Senate yielded no concrete solutions on how they can help the 68,000 drivers who suddenly found themselves without this source of income. But it did bring about something that could appease testy regulators, an apology right from the regional offices of the ride-sharing giant.
I told the LTFRB chairman that if there was a misunderstanding on our part relative to the LTFRB's intention with their prior order, then that was our mistake. You know, they are our regulator. We're here to respect the regulator. And in this case, if there was a misunderstanding, then I apologize for that. I didn't mean to have any misunderstanding.
Pacified for now, the LTFRB decided after the meeting to allow Uber to file another appeal. Uber says they may include in that an offer to pay a fine on top of the 5 million pesos they've already paid in July, in lieu of serving the full 1-month suspension. Uber will also lay out plans to compensate the affected drivers. A hearing has been set at the LTFRB on August 23, Wednesday. Senator Grace Poe, chair of the Senate Committee on Public Services, indicated she was hopeful some form of a compromise may be reached by all parties, but criticized the government agency's slow decision-making process.
Sa tingin ko, magkakaroon ng resolusyon na mas maikli, pero malungkot rin dahil nakita natin na ang mismong proseso ang nagpapabagal sa resolusyon. Dahil kailangan pang maghain ng isa pang pleading ang Uber na kailangan pang desisyonan ng LTFRB dahil meron silang proseso.
The LTFRB says Uber's suspension could be shortened to less than a month, depending on what they include in the second appeal. Board member Attorney Martin Delgra, one of the most vocal against the way transport network companies have been running their business, says he was surprised by the change in tone.
We're actually a bit surprised na a complete turnaround on the manner and character by which they have been dealing with LTFRB in the past 12 months. No? Eh ngayon, it's a complete turnaround na profusely apologetic sila sa nagawa nila. You don't have to apologize to us. You apologize to the people that you have adversely affected.
Senator Poe urged the LTFRB to put the commuters' welfare first when they make the decision.
Ito yung masasabi ko. Kung talagang iniisip ay ang ating mga drivers at mga mananakay, ang offer ng Uber ay napaka-generous. Dahil tinatanggap nila ang kanilang pagkakamali, Pangalawa, sinabi rin mismo nila na kung ano yung requirements ng LTFRB na hiningi sa kanilang mga data, bibigay nila. Sinabi rin nila na ang kompensasyon sa mga drivers ay ibibigay nila at magbabayad pa sila ng multa.
In the meantime, Uber remains suspended, and authorities are still under instructions to find and detain drivers caught still plying the streets. Their cars may also be impounded. The issue remains a flashpoint online where inconvenienced riders have taken to vent their anger at the government agency. Senator Bam Aquino, who attended a closed-door session, says the new monetary penalty on Uber will serve the same purpose as the suspension without hassling consumers, especially now that Uber's extended an olive branch. Gerard de la Peña, Bloomberg TV Philippines.
While Uber operations remain in limbo, transport groups have also sued the ride-sharing company for alleged colorum activities. Leaders of various transport organizations are suing Uber for allegedly violating the Public Service Act when it, quote, knowingly and willfully violated the LTFRB suspension. 6 Uber officials were named as respondents in the case, as well as 2 drivers who allegedly accepted passengers on August 15th, the day the suspension was in effect. The complainants say they are not against Uber, only its stance of wanting to be above the law. Meanwhile, the LTFRB has ordered an unaccredited TNC called Arcade City to immediately cease operations. Yesterday, the ride-sharing startup posted on Facebook saying, "Goodbye Uber, hello Arcade City." The self-titled Uber alternative announced that it was doing same-day recruitment and activation to fill the shortage in rides. As of 3 a.m. this morning, Arcade City says it has 150 drivers in Metro Manila. Well, we're going to pause for a short one, but right after this break, JG Summit expects to end the year flat profit-wise because of challenges in URC and Cebu Pacific. And we'll be speaking to an analyst about who's betting big on Megawide despite their earnings decline over the past 2 quarters. You're back on Starting Gate. I'm Regina Lay. Let's take a look now at the latest news on local companies. JG Summit expects to end the year flat in terms of core earnings. Company President Lance Gokongwei says the airline and food businesses will offset better performance from its property and petrochemical units in the second semester. The conglomerate is seeing lower earnings from Cebu Pacific due to higher fuel costs and a weaker peso. Its food unit, URC, is still recovering from the mess in Vietnam involving its C2 and Rongdo drinks. Domestically, the coffee segment lost market share because of stiff competition. JG Summit's net income for the first half of the year fell 17% overall. Cebu Pacific SebGo will start flying international destinations out of Zamboanga by the end of October. Starting October 29, the budget carrier will fly to Sandakan, Malaysia 4 times a week. SebGo President Alexander Lau says the current 14-hour travel by sea will be cut to just a 40-minute hop by plane. And you can add Jetstar to your options if you're traveling to Singapore from Clark. Interaction is reporting that the budget carrier will start operating the Clark-Singapore route by November 28, 3 times a week at least. The new route is Jetstar's first service from the Central Luzon Gateway.
The PSE has been on a steady 3-day winning streak leading up to today's GDP figures. But just what is the market's mood ahead of today's release? For more on that, I'm joined from the Manila Bureau by Rico Locsin. He's an equities dealer with First Metro Securities. Rico, thanks for joining us this morning. Look, Rico, you're no stranger to disappointment. I mean, you're a New York Knicks fan after all. And the markets did slip on May 18 when first quarter GDP figures missed estimates. How do you think the PSE is going to trade today when GDP figures are released?
Well, for us at First Metro Securities, we're not concerned, or we're very comfortable for the Philippine economy to grow at around 6%, even if it's below the consensus estimates. Why? Because it's actually in a Goldilocks situation where we're not growing too fast despite lower interest rates, and the inflation is tempered right now at the lower end of the Philippine target. So growing at around 6% is still well above the average past year. So we're very comfortable, even if it's at 6.4. If it's at 7, then we're happier with that.
Rico, the economy and the markets are closely tied by two themes, taxes and infrastructure. And now we have comments from Secretary Dominguez that they may have to cut infra projects to less than half of what is planned if the tax reform bill isn't passed. Are the markets concerned at all given he's raised this possibility?
I think the market right now is still confident that we can still pass the tax reform. We're just not sure which package we're going to pass, most especially that there's a snag in the Senate. They're not consolidating with the House bill, which was passed a few months ago. But I think the market is still confident that we will be able to pass a package this year. We're just not sure what package this will be and when it will be. But most especially, the infrastructure plan hinges on the tax reform package. So we remain confident that this, despite right now the one that's pushing the infrastructure is the private sector, we still see that there's some tailwinds for this when the government kicks in.
All right, Rico, speaking of infrastructure stocks, you've got your eye on one of them, actually, and that's Megawide. And now, after the government scrapped bidding for the regional airports last May, Megawide wasn't wasting any time. And just this week, they closed a big contract with 8990 Holdings and got pre-qualified as a bidder for the North Goa Airport in India. Talk to us about how these recent moves and developments and what it might actually mean for Megawide's future, especially with concerns that the local infra play actually might be stalling.
Yeah, we were pretty disappointed that the PPP has been scrapped. So Megawide has been doing their best, most especially, like yesterday it was announced that they had a 14 billion peso deal with 8990 Holdings. Well, we clarified this with the company that this won't be a lump sum deal. This will be divided into 5 years, so maybe up to 2022. And their pre-qualification bid in the Indian airport is a good sign that they are pushing for the airport business, because we've seen their model in Cebu and it's been working for them. Most especially now, it's around 50% of their revenue. So Megawide has proven themselves in the airport industry, and they've set their sights actually in the EPC bid for Clark, and they've also given an unsolicited bid for the another Cebu runway. So the prospects are great for Megawide, most especially in the airport sector.
Now, Rico, earnings, though, at Megawide have hit a patch of turbulence. They're on 2 straight quarters of lower profits. What might they need to do to actually turn this around heading in as we get deeper into the second half of the year?
Actually, going into the first half, management guidance has been in line with the profits. So we're not actually shocked. They gave this ahead of time. So this is a result of the booking of the contracts, the revenues from the contracts. So this isn't something we are concerned about. Most especially, this was already in line with the guidance. And it's a seasonality of the industry. It's more of that than them actually slowing down.
Jumping off from that, Rico, can you give us your impression of second quarter earnings as the season wraps up for this quarter? Some analysts we spoke to were a bit disappointed with earnings growth. Do you share their disappointment or their same sentiments?
Well, we at First Metro Securities see that there were surprises in the earnings results in the first half of the year, but we weren't necessarily disappointed. Disappointed in the consumer sector, definitely, but some sectors actually, like the telco, there were some surprises there for PLDT. But we remain bullish for the market as a whole, not necessarily the fundamentals, but the economy is doing well, because we see that the market is continue a foreign fund inflow. As we check our EPFR data, there's still a lot more funds that haven't been deployed into the country that is meant for the Philippines. So despite local selling, the foreigners have been taking in the selling, and we're actually higher right now. So if you look at this as people have been saying that 8,000 is pretty expensive, but we've been here 3 times already. And the first 2 times, yes, the value was expensive. So now we are in a good opportunity to actually say earnings growth has been there. So this is very a good situation for the stock market.
Rico, with regards to recent developments, I wanted to pick your brain about the mining counter. By far the best performer on the local bourse yesterday, and they seem to have come out of nowhere. Or did they come out of nowhere? Can you give us your thoughts as to why they beat the index yesterday with that big plus 2% jump?
Well, they had a big drop a few weeks ago, most especially after the State of the Nation address of the president. He was going to tax them to death. But if you look at the fundamentals, the earnings for like nickel, and nickel grew its earnings, FNI grew its earnings, Felix trimmed its losses. Why? Why is there a surge yesterday? I think it's more of the dollar, the weakening peso and the dollar. Why? They export this metals outside, and the cost is in pesos, and the earnings are in dollars. And the DNR has maintained that they are in a review phase, so there's no talk about the suspension. Not much talk about suspensions right now. It's just that they're reviewing. So people may have took the sell-off as a bounce. This may be a bounce from the last sell-off, but the mining sector fundamentally is doing pretty well, most especially that the dollar's going up.
And just quickly, Rico, I just wanted to tell me in one sentence, what has a better chance of, who's got a better shot? The PSE above 8,100 at the end of the year, or the Knicks making the playoffs?
Knicks making the playoffs. Maybe in 5 years.
All right, we'll leave it there. Rico Luxin from First Metro Securities. Thanks again for joining us this morning on Starting Gate.
Lots more to talk about in the markets when we return, but we're going to pause for a short one for now. After this, we'll be taking a very close look at the chart for Jollibee, which is sending investors some bullish signals.
Agriculture is a key factor in economic growth. Let me show you how agripreneurs revolutionize their resources into agribusiness success. I'm Sean Yao. Join me on Go Local Friday nights at 9 p.m.
You're back on Starting Gates, and we're just minutes away from the local markets opening their doors to trade on this big day. But first, let's get through some stocks to watch, and we bring JP back in. What's your pick today, JP?
Look, I mean, GDP figures are going to be released today, and let's not make any mistake. One of the big drivers is consumption, and because of that, I am clinging to the B today. Yeah, Jollibee, of course. We've seen those breakout second quarter figures. I mean, leads to say 18.1% up year on year for the second quarter, and a lot of that growth being driven surprisingly by growth in overseas operations. And this has a lot of the technical analysts now taking a shining to Jollibee and really highlighting some interesting trading patterns or technical patterns that say that Jollibee could actually rise and break out once again. Take a look at where the stock price is right now, 239 pesos. And the reason we're highlighting this, because I'm bringing back one of my favorite technical tools to really look at whether or not a stock's going to move up. And we're talking about the golden cross. Remember, a golden cross is when the 50-day moving average or the short-term moving average of the price actually breaches the long-term moving average, indicating this momentum and also indicating a lot of leverage for the stock to move up. But we'll take a look at that. The short-term moving average, which is in the pink there, it's actually above the long-term moving average once again. And it's no surprise that it's coinciding with a rise in Jollibee shares we've seen over the last couple of days. So the fundamentals are supporting a rise. The technicals are pointing to that also. And some of our colleagues at our wire colleagues at the Bureau have also pointed out that the last 5 times that Jollibee hit a golden cross, we saw a significant gain actually for the stock price. How far it's going to go? Well, we'll have to ask some of our analysts exactly how much farther the bee can actually fly. But given those strong fundamentals that we've seen and also these very favorable technical patterns, there's no telling as to how Jollibee might fare. And if we see a sustained growth, at least in the consumer sector, when GDP figures are released later on, I mean, this could bode well for one of the countries or the country's largest fast food operator. And Jollibee is definitely something to watch out for when the markets open later.
Feels like they are on the cusp, I should say, of a breakdown there, isn't it, JP? Well, as for me, I'm taking a look at quite an interesting stock myself. All of you guys out there that are holding JGS shares, listen up, because this is about the most direct, guidance yet that we've gotten from the top there. JG Summit says they are expecting to end the year flat. And that's in terms of core earnings, core profits. No less than CEO Lance Gokongwei himself said that in a phone interview with Bloomberg. He says we expect a period of consolidation, so it will really be a fairly flat type of year that hopefully will serve as a platform for us to return to growth next year. There you have it. They're not expecting to return to growth anytime soon, not until next year at least. If you take a look at those numbers right in front of your screen, that pretty much tells you why. The petrochemical business and Robinsons Bank are doing very, very well. Look at those digits, 32% up, 20% up. However, the drag, as you can see as well, is coming from URC and Cebu Pacific. Both of them hit by weaker than expected earnings in the first half. For URC, Gokongwei says they're seeing surprisingly slower growth. Of course, part of the problem has to do with its Vietnam unit, which was battling the controversy over its C2 and Rongdo drinks, which were found to have very high lead content. And so they had to issue a recall last year. And so Gokongwei says the key focus for them moving forward would be to revive growth in URC, not just domestically, but also overseas. And then with Cebu Pacific, of course, the challenge there is a higher fuel cost as well as a weaker peso. So they're being squeezed on both sides of the spectrum. And as a result, overall, JG, as the parent in the first half of the year, lost about 17% in earnings. Also, one thing I forgot to mention about the food division, coffee segment also losing market share because of stiffer competition. So again, the consumer retail units, they're struggling a little bit, and that's what's weighing down the parent company's overall figures at this stage. Flat growth this year, return to growth next year is what CEO Lance Gokongwei is telling us.
I mean, well, it seems that there's a mood of malaise that's really gripped the house of Gokongwei, with JG Summit shares also responding. But hopefully, CEO Gokongwei is right that they can actually turn things around, Rich.
Certainly hope so for all the shareholders at least. All right, moving on now to other stories. The Agriculture Department is scrambling to contain the bird flu outbreak in Pampanga, which is turning out to be bigger than expected. Also, the poultry industry has begun bracing for heavy losses. Shala Francisco tells us more.
Poultry growers are an unhappy lot these days. They say the Agriculture Department may have overreacted to the avian flu outbreak in Pampanga by ordering hundreds of thousands of birds culled, which in turn caused unnecessary panic nationwide.
Lumaki lang ng lumaki yung istorya na hanggang ngayon, pati sa Visayas and Mindanao, na clean area, naapektuhan na rin.
Since the outbreak was first reported, poultry sales plunged some 75 to 80% in Central Luzon and around 20 to 30% in Southern Tagalog. Calabarzon and Central Luzon are the two biggest producers of chicken and chicken egg in the country, and some of these products are shipped to Visayas and Mindanao. The Visayas region, several hundred miles away from the epicenter of the outbreak, is starting to feel the losses.
in Negros, nag-stop na silang bumili ng manok. Nag-drop ang prices ibo ng 10 pesos. So, yeah, first time nangyari to.
If the South, or meaning Visayas, won't be able to get their eggs there, most probably, even kahit na wala silang problema doon, prices of eggs and other commodities there would go up.
The DA has said the ban may be lifted after 90 days, but Piñol later clarified it may be shortened, though they'd still need to wait 21 days before deploying what's known as sentinel birds that will ensure the area is virus-free. Traders are also asking local governments to stop blocking shipments from other parts of Luzon.
They're perfectly safe. So let's not restrict their movement, especially within Luzon, because we're worried about the food security.
Since the ban, some 1,500 eggs from Candaba and Batangas have been confiscated in Caticlan Port, while another 21 tons of chicken from Manila were confiscated in Cagayan de Oro Port. The army and police are now jointly manning the checkpoints, though Piñol warns they may do more than just seize the contraband next time.
So di bali nang akusahan ako na nag-overreact kaysa sabihin nila na pinabayaan ko at nakakalat sa Visayas o sa Mindanao. We will not only confiscate, we will file charges.
More than 73,000 chickens and ducks have been culled out of the 600,000 or so affected by the H5 strain of bird flu in Pampanga. The problem is turning out to be bigger than what officials first thought, so they've asked 300 soldiers for help in exterminating the animals. Piñol says they've yet to ask permission from the DNR to burn the carcasses, but they will proceed anyway.
Kung nagkulang man kami sa pagpapaalam, wala naman kami malicious intention. I think they will understand. Pahabol na lang. Yes, we will proceed.
The fastest, practical, safest way to dispose it will support the DA.
Piñol says he will be asking President Duterte for 100 million pesos in calamity funds. And given the tedious process of clearing ground zero, he's already warning that this disaster will likely affect agricultural output for the third quarter. Shaila Francisco, Bloomberg TV, Philippines.
6 minutes of the open, ladies and gentlemen. Guess who came out to play on this GDP release? We're seeing the PSE, or the main index, up to 8,082. No, don't blink, don't rub your eyes. That is not a typo. We're seeing it's actually on a pretty strong start, although it's trying to pare back just a touch. But at 8,078, we can dare to dream of 8,100. But again, this channel seems to be a pretty tricky place because the PSE's found it hard to crack 8,000. To be in the first place. But still, I mean, it's a strong start. We're seeing all sectors so far in the green right now. Properties, financials and services leading the charge so far for the main index. And mining and oil, although it is trailing, stays in the green after that blowout Wednesday when they actually led all other sectors. One of the big reasons why mining is up also, we have to take a look at how how metal prices have done so far globally. Take a look at commodities right now when you look across the board. In Shanghai, copper and aluminum are both raising to pretty strong gains today. And we're also seeing nickel and iron ore actually also climbing so far at this open, and they're sustaining this rise or these gains that mostly base metal prices have accrued. And this, of course, is also helping a lot of these other miners that we have here. But really, when you look at who's driving the main I guess the mining and oil counter over the last couple of days, the story really has to be all about PXP Energy. It's the sole oil explorer on the mining and oil counter. Of course, there is news from Business World that PXP Energy, at least, is set to revive talks with some of its Chinese counterparts for exploration of oil in the South China Sea. And these are big developments, of course, that involves PXP Energy. This stock has been rising quite significantly over the last couple of days, and today is no exception. They're up by just under 7.5%, and so far the big mover in the mining and oil space. Again, it's a decent start for the miners, but again, remember, it's the oil explorers that are driving things, because we're not seeing a lot of activity among some of the other miners today, despite that rise in global base metal prices from nickel to copper. Also, PXP Energy seems to be the only story in town right now for the mining and oil counter. But who knows? After GDP releases, if they are good numbers, we could see this get a little bit more active later on.
Okay, so nickel price is rising, but one company we know that isn't benefiting is DMCI. How badly did its mining unit do in the first half? We know the numbers now at this stage, right, Japes?
We actually do, and when you look at DMCI, you're seeing that the stock is actually tracking back a bit. They're down by about 10 centavos to about 15 pesos 80. Okay, so how badly did DMCI nickel do in the first half? Well, brace yourself, Rich, because they said that that shipments of of nickel ore actually fell by a staggering 71% year on year. Total shipments, in fact, they said from Berong Nickel and Zambales and their Zambales nickel mines also fell to about 257,120 wet metric tons. And that's down from the first half of 2016 when they reported 873,000 wet metric tons of nickel ore shipments. Of course, Berong Nickel and Zambales Nickel were among the mines that were affected and really singled out by a former DNR Secretary, Gina Lopez, when she ordered that slate of mine closures and suspensions. Of course, they were also cited as being one of those key examples of mines that mine near watersheds. But now that there is a little bit of clarity, or I guess a little bit of a slightly I guess more optimistic reception to Royce Mato's moves in the DNR. We're seeing just a little bit of reprieve there. But remember, this affected how much nickel they actually shipped out, and is also a huge contrast against how well their housing unit or their property unit actually did. Remember, DMCI just the other day reported that their DMCI homes unit surpassed their full year sales target in the first half of this year so far. So again, it seems to be tempering. We're seeing the property sector of DMCI doing well, but their mining unit definitely feeling the blues. And the stock, as we mentioned, is down to 15 pesos and 80 centavos. We'll be monitoring this particular stock also after the GDP release later on.
And we'll have certainly more in the markets when we return. Plus, back to Central Chief Nestor Espinilla talks to us about the delicate balance between deregulating banking and making sure the lenders are sound enough to fight off fraud. That interview coming up.
Want to take your business to greater heights? I'm Kinte Pastrana, and I can show you how. Join me as I chat with the experts here on Thought Leaders every Monday at 9 p.m.
Welcome back to Stargate. I'm JP Ong. The central bank is looking to liberalize rules on foreign exchange trading, one of the first major shifts bound to happen under the BSP's new leadership. Well, I spoke to Governor Nestor Espinilla, who says reforms are needed to complement the growing economy. Take a listen.
When I was talking about the reforms, further reforms in the foreign exchange regulations, I was really talking about improving the ease of doing business. Because right now the economy is growing, there's need for access to foreign exchange to be able to do trade and other financial transactions. And to make that work, we need to have a regime of foreign exchange regulations that's more compatible now with a more modern Philippine economy. As you know, if you look back, many of our foreign exchange rules were crafted back in the days when foreign exchange was scarce. This was in the 70s. So these rules have become, many of these have become anachronistic. Although we have already done several waves of foreign exchange liberalization in the last couple of years, about 9 waves so far, there's still more to be done. And that's really meant to create more efficiency and promote business
Governor, sticking to the issues, I guess the issue with regards to some of these things that have happened to Metrobank and BPI and BDO, do we know yet what sort of sanctions or disciplinary actions the BSP wants to impose on Metrobank or BPI?
No, I think, JP, the way to look at these things, large banks are complex organizations. These kinds of things happen in any bank, even if you ask around globally. But that's why it's important. And this is really where regulations come in, that the BSP keeps elevating the standards of these banks so that they'll be able to manage this risk as much as possible. But that's certainly no guarantee that these things don't happen. But what's important is banks are able to contain it and to recover from it and move on without risking their constituencies, their depositors, their creditors, and the like. And I think the recent episodes, unfortunate as they are, were driven by many things. Some were related to cybersecurity issues. Some were pure human error. Others were reflected internal fraud. Each and every one of them were eventually detected, contained, and there's no threat at all to the banking system. This is also the reason why the BSP has over the years been very aggressive in requiring our banks to constantly build up their capital bases precisely for moments like this, so that they will be able to be resilient to all kinds of challenges that may happen. And that's really the value proposition of our banks. They are well-regulated institutions, they are resilient, and they can continue doing business even if certain untoward events happen.
So what sort of new regulations are you looking to roll out with regards to banks beefing up their cybersecurity and risk compliance capabilities?
Okay, so maybe just to step back, in 2016, we actually upgraded our operational risk guidelines, and this covers as well cybersecurity issues. Forthcoming is a comprehensive update of our information technology risk management framework soon. The public will see the unveiling of these upgraded IT risk management standards. But along the way, we've also put in additional safeguards. For example, we put out guidelines on social media risk management, and as well on business continuity. So the BSP is constantly thinking about these potential issues that are affecting our financial system. And I should point out that cybersecurity is not just a unique Philippine risk. Cybersecurity is a problem of banks in many other jurisdictions.
Time now for a quick check of national headlines. The Bureau of Internal Revenue has kicked off its investigation into possible tax violations by Comelec chief Andy Bautista and his estranged wife, Patricia. Also covered by the probe are University of Santo Tomas Law Dean Nilo Divina and his law firm Divina Law, as well as the Luzon Development Bank. Bautista's wife claimed her husband got checks from Divina Law as commission, and he also apparently had passbooks showing at least 329 million pesos at the LDB. Gilas Pilipinas is out of the running for the title of the 2017 FIBA Asia Cup after losing 86-118 against longtime rival South Korea in Beirut, Lebanon. Both teams entered the quarterfinals with 0 losses in the tournament so far. And now Gilas moves on to the classification round starting this Saturday to compete for 5th or 8th place. Later this year, the national team still has the SEA Games in Kuala Lumpur and the FIBA World Cup qualifiers to look forward to. And President Duterte welcomed the recent one-time, big-time anti-drug operation in Bulacan that left 32 drug suspects dead. 107 other individuals were arrested during around 60 separate raids within the span of 24 hours. Duterte says cops involved are under his protection despite criticism over how the raids were conducted. In a speech on Wednesday, Duterte also lashed out against the Commission of Human Rights for meddling in his drug war.
32 in a massive raid. Ganda yun. Makapatay lang tayo ng another 32 every day, then maybe we can reduce what ails this country. Itong si Mistiso, itong si Gascon, mas marunong pa sa iyo. One of these days, kayong human rights, kayo ang imbestigahin ko. Totoo. Conspiracy. Galit ako sa inyo. Because hindi niyo tinitimpla kung anong klaseng papasukan ninyo.
Right after the break, Shakey's opens its 200th store with an eye towards hitting 500 in 5 years. President Vicente de Gregorio tells us more when Starting Gate returns.
You're back on Starting Gate. I'm Regina Lay. Shakey's has hit a new milestone, its 200th store. The pizza chain continues to roll out its aggressive expansion plan off the back of first half profits that jumped 10% to 386 million pesos. Company President Vicente Gregorio spoke to Bim Santos about the significance of this new outlet.
We consider it a very, very big milestone. It's a good round number, 200 stores. We've been growing in the past, just 10 stores a year. But in the last 2 years, we project to grow about 18 to 20 stores this year. And in this year alone, we project to exceed 20 new stores for the system. So we're very happy with this store because not only is it our 200th store, but it officially launches a new Shakey's design, store design, which really elevates the brand and provides a better experience.
This redesign, would you say it's catered more towards emerging market, which are millennials? Or?
Well, it would cater to many groups. Our main primary would be the families. And when we say families, it's not just the organic or real family, but it could also be business or office families, sports, communities. The Shakey's is really designed to provide these big groups.
You mentioned earlier, sir, 500 stores in five years. Is it an aspirational goal, or is that something that really...
That's just an aspirational goal, but we continue to see more opportunities. Much of our stores are still concentrated in Metro Manila. There's a very, very big runway in Visayas and Mindanao. And this year alone, we're opening several in those areas. So as the economy improves, and we expect it to do so, we think there'll be more stores coming for Shakey's.
A brief word, sir, about your recent Q2 financial report. What's the story behind that, and what are you looking forward to for the remainder of the year?
It's not actually a new thing. There's quarterly seasonalities where we came off from a very strong first quarter. Second quarter normally is the lean period for the first half. So the combined still came out very good for us relative to other industry players. We should get better as we go on for the rest of the year.
During the last briefing, you mentioned you're looking at the mid-teens in terms of full year performance.
Yes, we're looking at mid-teens earnings growth for 2017. And we're very confident that we're on track. And there's a lot more initiatives on the way, so the team will be working hard.
All right, ladies and gentlemen, we're just over 20 minutes into the open right now, and you're seeing that the PSE is coming quite close to 8,100 at the moment. There's a lot of exuberance, of course, before GDP releases today. Median estimates put it at 6.4% growth for the second quarter, and 8,097 at the moment, practically 8,098 with all sectors in the green, including the holding space, because there's a lot of things to really look at. Remember, a lot of people say that conglomerates pretty much track the growth of the global economy, given how diverse and widespread these companies are. And I want to take a look at two particular companies. One is Regis picked just a while ago. We're looking at JG Summit, also getting a bit of a lift today after a series of pretty disappointing earnings results over the second quarter. They're up by about 25 centavos so far. But remember, CEO Lance Gokongwei has told investors that to expect just flat growth in 2017 as they try to engineer a turnaround for 2018, given the fact that there's still a lot of headwinds they're facing, both internationally with regards to their unit URC, food unit URC, and also some of these other, rising costs, and also these lower profit margins we're seeing among some of their units also. And finally, we also want to take a look again back at DMCI, because it's an interesting story, of course. Remember, DMCI has fallen already about 15 pesos and 72 centavos so far. DMCI did report that their first half nickel shipments were down by about 71%. Again, it is feeling the effects of a pretty topsy-turvy last 12 months for the mining and oil counter, of course. And this also coming on the back of their rosy release saying that their housing unit, DMCI Homes, actually met their full-year sales target in the first half of 2017. So it really is there to temper the exuberance with regards to DMCI. Mining is down for this particular conglomerate, but housing is showing signs of very robust growth. That said, again, DMCI, like many of the conglomerates, are going to be watching out very closely for what the GDP figures are going to be. And we're going to also be seeing how the markets react when those figures are released, whether or not they beat estimates.
We're going to have to pause for a short one for now, but right after this, Finance Secretary Sonny Dominguez says the country can easily hit 7.5% growth in 2 years. That interview coming up. Plus, we're counting down to the second quarter GDP announcement. Stay with us. You're back on Starting Gate. I'm Regina Lay. The peso slump is temporary and the country remains in a sweet spot. That is according to Finance Secretary Sonny Dominguez. He told Bloomberg's Haslinda Amin that boosting infra spending will spur economic growth. Take a listen.
Once we start our infrastructure program going, where we will increase our spending as a percentage of GDP from an average of 2.5% to a high of 7.5% of GDP, our infrastructure program, we will certainly be in the upper edges of our target.
This year or next?
Probably 2 years from now. This year, we're just getting going. Next year, we will have about $23 billion, and that snowballs. And by probably 2019, we're going to be really going great guns.
The Philippine peso has been under a lot of pressure at an 11-year low. How concerned are you, or are you comfortable with the peso at that level?
Our imports actually of capital goods and things like electrical equipment, factory equipment are outpacing our exports. But these are investment-led purchases and not consumption-led. So this is going to add capacity to our economy and are certainly just temporary.
The Duterte government has talked about a spending plan, including free tuition. It comes at a time when the tax bill is still stuck in Congress. How confident are you that bill will be passed and spending can be covered?
I'm pretty confident that the bill is going to be passed. It has already passed the House of Representatives and it's now in the Senate. And I believe it will be the comprehensive tax reform program, which combines both a reduction in income tax rates and income tax due from the poorer segments of our society, as well as increases in excise tax. Will be passed before the end of the third quarter, which will allow us to implement it by July.
You've talked about issuing a 30 billion peso bond sale.
Yes.
Given the liquidity that we're seeing right now, is there reason to think that you can issue a bigger amount? Would that make sense?
We probably could issue a larger bond offering for the Marawi incident, but as we see it right now, the cost of this reconstruction will be about 30 billion pesos. And really the idea is to allow the ordinary citizen to participate in the rebuilding of the Marawi area. It's really a nation building effort. So people will feel that they are contributing to the betterment of the situation in Marawi.
Of course, any day we have GDP figures being released, we bring in the big guns, and this time around we've got two in the studio with us. First, I've got June Neri, he's the lead economist at BPI, and also Carlo Asuncion, he's the chief economist at Union Bank. I wasn't kidding when I said we bring in the big guns on GDP, hey? Guys, let's begin with the bird's eye view. What are you expecting to see from out of this set of results? And let me just put into context, right? The significance being this is the first full year GDP report under President Duterte. What do you want to see, June?
Well, we're looking at a slight acceleration from the first quarter's 6.4%. But a little slower than last year's 7.1%. We have some good numbers coming out from the government, catching up on their spending for the month of June. And you have electricity sales actually accelerating in the second quarter compared to the first. But that some of the numbers are showing a mixed picture. That's why we're not really seeing an aggressive, we're not projecting a 7% growth again for the second quarter.
And Carlo? In fact, your Union Bank's estimate is not too far from BPI, 6.5% for 2Q.
Well, basically just looking at the same growth drivers. So we have consumption, we have, of course, exports is growing because relatively the external environment is improving. So pretty much there's nothing really different that we're looking at. But well, they say that the numbers in terms of net expenditure is growing, so we'll see. But 6.5 is.
What was a big disappointment for you last quarter?
Well, I think it was just looking at I was expecting exports to be higher, so but it wasn't the way it was. So.
We'll talk about exports in a little bit more detail shortly, but I want to put this into context. So consensus is at 6.4% at this stage. We don't have the actual numbers yet. If you put that into context compare that to the rest of Southeast Asia or even Asia, in fact, we are still the leader. Like, take a look at that. Orange is an estimate, of course. Green is an actual number. 6.4% is just behind China. Should we? What is this chart telling you guys?
To me, it's still an outperformance. Should be enough to attract the radar screens of investors, especially since you're coming off the strongest quarter last year. No? That's probably a natural soft patch following an election year, where the second half is actually expected to accelerate, coming off a softer base. So this should be probably the slowest 2 quarters of the year, and we should see an acceleration later on. So if at 6.4, that should translate to an even higher figure for the second half.
Does this tell investors that economic fundamentals, as the cabinet members like to say, is very sound?
Well, since 1999, you have a positive growth. So if you look at that, just behind this powerhouse China, that's really good.
Well, if you look at compared to the previous administration, it is quite impressive at 6.4. I recall the slowest quarter in 2011 was, I think, 3.1%, which was a huge disappointment back then. We don't see this happening in this administration with the way the government has been hitting the ground running, spending immediately into the early part of its
So if anything, you're expecting this number to continuously edge up?
Yes, this should be one of the slowest quarters.
That's a luxury, isn't it, to say that 6.4% is the slowest quarter?
Yes, exactly.
Let's break it down. Carlo, you talked about your disappointment with exports figures last quarter. We just got the latest for June, just last week. In fact, to say that it was a disappointment is, I would have to say, an understatement, because consensus was for an increase of 14%, and yet it just barely flatlined. But at the same time, I'm getting word in my ear that the numbers have just broken. Let me throw it out to JP to break the numbers. JP, take it away.
Gentlemen, Reg, yes, the figures are out so far just about a minute ago, and take a look at that. It is a beat, but just by a hair. Second quarter GDP figures coming in at 6.5% growth. That's just 0.1% above median estimates by economists surveyed by Bloomberg, which saw it coming in at 6.4%. So it's a slight beat nonetheless. But again, it does harken perhaps that perhaps some of that infrastructure spending or that government spending that Budget Secretary Ben Jokno said picked up in May actually played into this. Also, we're still waiting for a more detailed breakdown of what I guess the economic picture for the second quarter and how we got the 6.5%. What drivers actually drove this increase and what lagged? But so far, 6.5%. That's the headline figure. It's 0.1% above the estimate, and so far a pretty decent beat. But of course, of course that's my opinion. We'd like to know also what the economists you have beside you, Reg, actually think about this particular figure. Back up to you.
And for that, I will have to go straight to Carlo, who had it right on the money, 6.5%. Unfortunately, you don't win a prize, but you get to tell us what you feel.
Well, we were, like I said, it was just the same as first quarter. We're waiting for, how the bill will pan out. But basically, it's the same, the first quarter. So that's why I said it's like, there's nothing much that's happening. So, but it's relatively positive all over. So, but...
there's no huge catalyst, but things are moving
there's nothing
along.
just really moving it up to where it should, like what they are saying.
All right, so let me come back to the exports picture, right? June data flatlined, rising just 0.8%. The expectation was for a jump of 14%. What do you think happened here?
Well, it's June, so I was like I said, was expecting it to be more robust, but apparently I think maybe it's some external reason why. So of course, because we're talking about exports. So I still have to look at it where the came from.
It could be a soft patch. At least the trends are showing a double-digit year-over-year growth from the 3 previous months. No? Actually, I'm more worried about the rapid growth of imports. We did see a slowdown. Well, in fact, a contraction for the month of June, the first time in for so long, because in May we actually grew by 16 or 17%
right.
on top of 44%. So that's a pretty amazing growth. Which, while it's a good signal that we are purchasing, we are buying stuff, that the trade gap and the current account position will continue to be in deficit.
And in fact, that's just what I was going to get to next. Let's take a look at the imports chart. In June, you've always told me that as long as we're importing capital goods and raw materials, there's no need to panic just yet. Take a look at that. Minus 2.5% for June. Really falling off a cliff from the May figures. Can I hit the panic button now?
No, again, I think it's one of those soft patches. Could be made up for by the July figure. And our full year projection for the trade gap should still
Coin it.
be close
Life
to 27
well spent.
billion,
Presented by Geico.
which is not
Invited to an upcoming wedding but unsure how much to spend on a happy couple? These days, some newlyweds have the audacity to expect a gift that covers the cost of your dinner. And some bridezillas aren't afraid to turn their wrath on guests. Yikes! But instead, consider your relationship with the couple and how much it costs to attend the celebration. Close to the lovebirds? Friends and family can give cash or a gift worth anywhere between $50 and $250. If you have to travel, factor in the cost of getting there. It's okay to spend less on the gift if you're traveling out of state or heading to a remote destination. Don't be afraid to give only what your wallet will allow. Don't feel like you have to spend a lot in order to prove your appreciation for the new couple. But do purchase off the registry. The couple selects items for a reason. No one wants 5,000 spatulas. Only go off the registry if you know them really well. Don't buy something you'd rather receive.
A 25% share out of that $3 trillion would mean about a $40 billion take-up. And if you don't have a current account surplus, that means it will come from the international reserves of the BSP, which is currently at $80 billion. Now, if half of that disappears, I think the BSP has to be more concerned, because that means the confidence of the market on the peso would even be eroded.
Well, that's a good point. They are not concerned at all at this stage. They keep saying, look, we've got ample reserves. It's enough to cover 10 months worth of imports at least.
Yes.
This is the record amount of reserves at this stage. So should they then be doing more at this
below
stage?
3%. So until it approaches that 4% critical level, they can tolerate some degree of depreciation. In fact, if you look at the depreciation this year versus last year, it's still moving at a slower pace.
All right. I'm getting a word again in my ear, gentlemen, that we now have live footage from the actual briefing at the PSA. Let's toss it out now to them first.
Performance was lackluster, but where private sector stepped up. And this quarter's GDP growth, where government really stepped up, but where private sector slackened. Just think what could have happened if both government and the private sector together exerted that extra effort. So we really need everyone and every sector to move in sync towards our goal of inclusive, a high trust and resilient society, and a globally competitive knowledge economy. On the demand side, growth in household consumption remained at 5.9%. This was supported by record high consumer confidence, modest inflation rates, and improving labor market conditions. Government consumption expanded by 7.1% from a meager 0.1% in the first quarter of 2017. This shows a marked improvement in the absorptive capacity of our government agencies. In addition to having improved on our expenditure management, government is moving towards reforming the tax system to make it simpler, fairer, more equitable, and also more internationally competitive. Together with other measures like the lifting of quantitative restrictions on rice, we expect to increase the purchasing power of the majority of Filipinos, particularly those coming from the lower income groups. We hope that the business sector will respond by coming up with innovative processes so that goods and services are produced with good quality but at affordable prices. On the supply side, industry growth was at 7.3%, supported by the growth of manufacturing and mining and quarrying sectors. Importantly, the agriculture sector continued to recover from El Nino, expanding by 6.3%. Meanwhile, the service sector continued to be the main driver of growth despite the slower growth of 6.1% relative to last year's 6.2% and the previous quarter 6.7%. We have outlined the PDP, we have outlined the Philippine Development Plan 2017 to 2022, the priority strategies for agriculture, industry, and services sectors. These strategies will be backed by comprehensive public investment program. But then again, we need the support of the business sector and civil society to make this work. On the part of government, President Duterte, as you know, has issued Executive Order number 27, directing all government instrumentalities, including GOCCs and LGUs, to exert every effort towards the full implementation of the PDP. In the agriculture sector, the goal is to increase the income of farmers and fisherfolk. The priority strategies are diversification into high-value crops and greater value-adding activities. The Department of Agriculture has already launched a website showing color-coded agricultural map that lists the crops that are appropriate for a certain location, given soil quality and weather patterns. The next step is to teach farmers how to make the map work for them. We are hoping that the private sector can reach out to other farmers groups, and associations, and introduce new technologies on further improving their productivity and adding value to their raw produce. In the industry and services sectors, we have outlined strategies for greater backward linkage with domestic firms and forward linkages with global firms. We hope the private sector, especially the medium and large enterprises, would take the initiative to link up with these micro and small enterprises. Let government know the catalytic intervention that is needed to make this happen. We just hope this will not be in terms of tax breaks, which will be counterproductive to our effort to ramp up revenue collection. To correct the expression, we need to correct the expression. Government does not create jobs, except in the public service. Even then, the intent is for a lean and mean bureaucracy, given our plan to right-size the government. We call on the private sector support and to support the call for greater dispersion of economic activity spatially, meaning across the regions, especially the lagging regions. We have been presenting the Build, Build, Build program of the government and our public investment program for 2017-20 to 2022, a companion document to our PDP 2017 to 2022. This has been updated, uploaded on the NEDA website. We need the private sector to undertake the necessary economic activity to increase the utilization of these public investments and get involved in them. The private sector can also help us monitor the progress of implementation of these investments, knowing that timely completion of projects work in both our favors. We will pursue in earnest the measures to ensure clean and efficient government, but we need the help of civil society to vigilantly monitor and report on erring officials in all instrumentalities and levels of government, including GOCCs and local government units. We also need the business sector to conduct transactions in government or with government always above board. Even as we continue to ease the cost of doing business, there will still be rules and regulations in place, but they will be streamlined and made more transparent and simpler. Let us know if these are burdensome and how the burdens can be eased, but let us not try to circumvent the rules. Given the performance of the economy in the first half of the year, we only need to grow by 6.5% to meet at least the lower bound of our full year target of 6.5 to 7.5%. With all of us exerting all efforts and moving in sync to improve our economic performance, we can see the country demonstrating a more impressive performance. We should really buy the monitor. Okay, let me repeat. I can see the country demonstrating a more impressive performance for the rest of the year and even over the medium term. We hope to have the continued support of the Filipino people, including the media, in achieving our collective plans and visions for the country. Together, let us aim and work for a matatag, maginhawa, at panatag na buhay para sa ating lahat. Thank you and a pleasant day to all.
Thank you very much, Secretary Pernia. Before we proceed to the open forum, please remain seated as we distribute the press kit. Rest assured that we have enough.
Well, there you have it, ladies and gentlemen, 6.5% growth for the second quarter in GDP, beating estimates by about 0.1%. But take a look at how the markets are reacting to that. And after the release, we came dangerously close and actually breached 8,100 at one point. But we're seeing the market starting to pull back down. The question, of course, is with this relatively positive release of GDP, did the profit takers decide to wake up a little early today and actually come into the markets right now? It's anyone's guess, but right now we're at 8,068, but still a pretty strong start for the markets, and we're hoping that it actually makes it 4 days out of 4. All sectors are pretty much in the green, and when you look at some of the big movers right now, we're seeing Metro Pacific Investments up there also by about 6 pesos and 70 centavos. This is really a big beat also because we're seeing government spending up, really giving a little bit more cheer at least to the to infrastructure related stocks such as Metro Pacific. But Jollibee happens to be on the decline at the moment. They're down by about 2 pesos 60 centavos. So you're seeing just a bit of a mixed reaction right now from the markets, and also a varied set of reactions depending on what sector you're looking at. But right now the market's still pretty much in the green, although it is starting to pull back after that GDP release, and we'll be monitoring to see how the market mood changes if it does as we move through this Thursday. Remember, GDP second quarter 6.5%, guys.
Well, there you have it. Investors liking those figures. However, the profit takers seem to have started swooping in as well. Gentlemen, we heard Secretary Pernia talk us through the figures. What stood out for you? Carlo.
Agriculture.
Okay.
I was very surprised.
Because we're seeing it now. Oh, well,
yeah.
If we flip back to the GDP by production chart,
Well,
Agri jumped 6.3%, if I recall
6.3, yes. So if we were playing around with those figures, if only just a small uptick with agriculture, that would be really good for the whole. So I'm really surprised that it's 6.3.
And Jude?
Yeah, well, that means poverty in the agricultural sector would have probably dropped a bit. Unemployment would have also dropped a bit because the crop sector has been hurt for at least 1.5 years already. We have good weather this year. The typhoons are lower than the average annual, and that should also be good for construction activities. So this slowdown in services should also translate to an improvement later on as the weather provides for a better opportunity.
But then now we're looking at the problem of bird flu, which Secretary Piñol himself has said could hurt 3Q GDP, rather 3Q agricultural output. Is that something on your radar?
Yeah, it is something on our radar, and we're watching. Sir June has mentioned, we were talking about it. It might be a wild card, so we're watching it closely.
So this could be a blip on the radar.
Yeah,
as well,
it's actually gonna affect industry as well.
Yeah.
Because after the chicken has been harvested, once it's processed, it's gonna affect manufacturing. So that could have some downside impact. But the way we look at it, it seems like the situation is still manageable, still quite isolated. After 90 days, if everything's clear, we should be back to a little bit less than normal. And hopefully mining will start to catch up as well, as we had seen in the second quarter, and hopefully make up for some of the slowdown that we expect in the industry.
That's right. We did hear that mining and quarrying activities are back up again, even though as far as I understand it, there is still a ban on open pit mining and mining in watersheds. The DENR is still trying to figure that out. What about government spending? Again, let's take a look at the numbers. It's up 7.1%.
Yes, that was actually the soft patch during the first quarter. On the spending side, we were significantly disappointed by it. Well, part of it is explainable by the fact that we had the first quarter pre-election period, but 7.1 is quite impressive. In fact, I think there might still be a spillover in the third quarter because they spent most in June. We had a soft number for April and May from the government, and the multiplier effect should be felt more in the third quarter. So this 7.1 could accelerate even further in 3Q.
Could even hit double
and
digits.
The absorptive capacity, according to Secretary Pernia, is really
finally
improving
kicking in.
then that should contribute significantly to the third quarter.
I want to delve a little bit now on the markets. We touched on this earlier about how the peso is still quite weak. In fact, it just breached an 11-year low earlier this week. And then yesterday, the EIU, the Economist Intelligence Unit, put out a report saying that, and if I may quote, it is becoming evident that despite the economy's stable fundamentals, investors are getting nervous about Duterte's volatile and heavy-handed style of governance and the risk of economic policy drift. What do you guys think? Is that the reason why the currency is quite weak?
Well, with regard to the peso, we've been really watching. Well, I've been really watching the U.S. That's more concerned with how they're doing things, because we know that it has been strong because of the QE in the past 2 or 3 years, and then this year the U.S. has started, normalizing, and then we hear that they're not doing it because of the inflation is not where it should be, the economy is not where it should be. But pretty much that's what I'm more worried about. I'm really looking at how they're doing their monetary policy rather than being worried about local. Domestic issues.
So it's more an external risk.
More.
Is that what you're saying as well?
But I'll take a more positive perspective there, which is the weakening of the peso could be an indication that investors are confident that build will be delivered. And because the foreign currency requirements of build is so huge, the market is merely anticipating that the demand for foreign currencies will be significant. So I don't think it's purely a confidence issue. It's more about the fundamental expectations for the current account deficit to revert to deficit from a surplus and even widen further in the coming years, although at manageable levels. And in anticipation of this demand, which is positive, I mean, it means that the investors are confident that the Filipinos will continue to spend more. And aside from the U.S. Hiking rates causing pressure for currencies in the region to depreciate, you have a positive domestic outlook that all of these infrastructure programs will be delivered.
Okay, so let's say the domestic picture is still quite robust. If we focus on the externals, the EIU also goes on to say that they are expecting a hard landing in China in 2018, as well a cyclical slump in the U.S. in 2019. I guess, looking out much further, are we prepared for such a scenario?
Should I go? No, you were the one who got the GDP figure, right? So.
Well,
what's your prediction?
Well, of course. Well, they have assured us. The BSP has assured us that they're ready to stand accordingly. If if they
volatility
think that
is excessive,
and I think they're just going to really be looking at how inflation, because in the past, every time there's increase in the Fed rates, normally Asian central banks don't follow suit. Normally they don't. So they really just watch it and look at more, I would say, domestic factors before they actually do their move. So pretty much I think, there's this bank that proposed a 100% basis points increase for next year. But we're looking at a more conservative move next year.
For the peso?
Yeah. In terms of the BSP
moving,
yeah.
And are you forecasting any adjustments this year at all?
Well, because as it moves, it's a moving target. So
But they do say they're very data dependent at this stage. Yeah. Just very quickly, the plan, when you talk about the borrowing plan, target there is 80-20, 80 domestic, 20% overseas. Is that, do the numbers bear out? Is that looking like a sound plan to you?
Yes, and it also supports the outlook on the peso, because if 80% of the projects will be funded by local currency, and yet you need foreign currencies to purchase all of these railways and trains, that means that the Bureau of Treasury itself will be in the dollar-peso market, and they will be picking up
priming.
The demand there, and cause further pressure for the peso depreciating.
So the weakness that you're seeing right now, that we're all seeing right now, is not a huge concern, basically.
Yes, we think it's a temporary development. In time, the productivity of the export and the entire manufacturing sector should improve with all of these infra projects and should translate to a recovery in exports. And we could actually see a reverse in the direction of the currency. But the market will cross will cross the bridge when it gets there, no? When exports actually start picking up. At the moment, when investments are still growing and imports pick up, the peso has to naturally depreciate. But when the exports numbers start to show that it is benefiting from the infra programs of government, then we can see a recovery for the peso.
But then you know what else we have on the horizon? Tax reform. Before you answer that, I'm going to toss it back out to JP for a quick market check. JP, what are investors telling us this time?
Well, it seems that the profit takers really are coming out to play because after breaching 8,100 a while ago, Reg, get this, we are just about 5 points above the closing price on Wednesday. In fact, that decline or that pullback pretty dramatic for the PSE at the start. And get this, all sectors are in the green except holdings, which is actually down by about 0.1%. So the conglomerates actually seeing a little bit of a sell-off right now. I will try to delve deeper into that as the market progresses today. But before we go, also, I did want to touch on how the peso is responding to those GDP figures. And you're seeing after a pretty strong start today, the peso is now at 51.31. Let's hope that Juneri is right in saying that the peso weakness might be just temporary or short-lived, because it seems that patient peso might be facing yet another tough day so far today. But remember, the story again, as we mentioned, 6.5%, second quarter GDP growth.
Oh dear, maybe you are right, JP. The profit takers have come swooping in. I'm going to pick up on that point and show you a chart of the peso that I've just worked out this morning. The peso still is very much the laggard in all across Asia. Take a look at that. It lost more than 1.7% year to date. We're talking in dollar terms here, but also against the other major currencies, say for instance, the euro, for instance, the yen. It is losing ground against the major currencies. And then I wanted to talk about tax reform, because you say this weakness is temporary. We should ride this out. But then the tax reform plan is also expected to be inflationary, right? It is expected to push up prices. And the sticking points right now are the excise taxes on fuel and on sugar-sweetened beverages. I'm hearing fewer arguments with the automobiles one, but with sugar-sweetened beverages and excise taxes. How does all of that play into the picture?
Well, we saw that oil prices went up by 50% year over year in late 2016 and early 2017. But inflation didn't really veer away significantly from 3%. So if we see these adjustments in oil prices in the forthcoming years, I don't see it either translating to an uptick that will lead us to blowing up that 4% ceiling of the PSP. So we're not really sure that it will cause significant inflationary effects. No? I'm more concerned about the effects on efficiency, because you're actually taxing the more efficient people more, through a higher income tax. No? And of course, in general, an indirect tax like oil taxes is not equitable. It hits the poor more.
And so of all the provisions in the tax reform plan, you're not for the fuel excise taxes?
I'm for it in terms of revenue generation, but in terms of the impact on equity, it's being offset by a lower income tax for the lower
Isn't
income
the
classes.
conditional cash transfer program supposed to offset it?
Well, partially, yes. and of course, again, as I mentioned, now that the 1 million and below or 500,000 and below will be paying lower income tax rate, that it somehow offsets some of the effects of negative effects of higher oil prices.
Given a very weak currency and the fact that manufacturers are determined to pass on additional costs, we've spoken to the food manufacturers chambers and the various industry groups, given that they're determined to pass on any additional cost to the consumers, is that not going to hurt consumption moving forward?
You're looking at tax reform, you mean? Well, I'm not worried at all about it. I'm really looking at the longer term impact of tax reform. Really, ever since I came on, I just keep talking about that, because there's a study that says that if you want to fund infrastructure, you can't just keep borrowing and borrowing. You have to get it from somewhere that has to be sustainable and solid. So I think for the case of the Philippines, on the longer term, this particular reform is really going to be very good. So I'm just looking at that. Well, in terms of getting into the specifics, I'm sure that our legislators will be able to address that, and them talking to a lot of interest in figuring that out.
You can actually have a bigger problem if the taxes are not raised and government has to borrow at higher interest rates. All of
Just to fund the infrastructure
all of the benefits
program.
that we enjoyed over the last 6 years with the low interest rate environment could be affected if the government is not able to pass the tax reform. So in a way, even if it raises inflation a bit, at least your borrowers will still be able to borrow at reasonably low rates.
But how confident are you guys that the House version is going to pass, get through Senate relatively intact? Are you optimistic? Are you pessimistic? Where do you stand on the issue?
Well, I think the president knows that. No, but of course, there's going to be a lot of debates and everything, and I think I'm very positive. I'm positive that it will be passed accordingly, and after much thought and much. I'm more on the positive side. It will be passed.
And how big of a concern is it? Let me flip the question. How big of a concern is it if they end up having to strip away, for instance, excise taxes on sugar sweetened beverages, and then also diluting fuel excise taxes, two of the biggest components of the revenue side?
To me, what's more critical is the fuel in terms of revenue generation.
Even though you don't like it.
Even though I don't like it, I have to accept it. I am just an ordinary citizen. And sugar, while it could be somewhat watered down, it's more of a health issue, I think, that the government wants to push forward rather than a revenue item. So a 15% dilution of the Congress version, I think is enough for us to be able to fund the programs, at least for the next 2 years.
Roughly 15% dilution.
Yes.
Beyond that, it's going to be painful.
Beyond that, it's going to 20% or more could be somewhat short of what they need to be able to keep the deficit on target. The state universities funding a more contentious
well,
issue.
That's just what I was going to get to. What did you think of that? Free tuition for state colleges and universities. Initially, the economic managers were all against it, saying we don't have money for it. After it was signed into law, Budget Secretary Ben Jokno says, at least for the first year, we have the funds for it. Where do you sit?
As a parent, that's good. But investments in human capital are always good. It just has to be, you have to balance it out. You have to, of course, listen to what are the realities on the ground and be able to translate that, of course, also improving human capital eventually. So I think at this point, government just has to, be creative, in making sure that this, because it's a good thing. It's a good thing. Imagine, all these, like for example, students from UP, all these bright students will have a chance to, be trained and for free, and.
But it also benefits those who can afford to pay.
That's another thing to.
So put on your economist hat now. What is your as an economist? What do you think? Is this a good idea?
Well, of course, I will echo the fact that where are we going to get the money? So I think that's where the crucial thing is.
Does the budget, do the numbers add up for you from what you've seen?
To me, it's either you will miss your deficit target because you now have 50 billion more or maybe 100 billion more.
And again, the deficit,
or if
the
you're
target
able,
is about 3% at this stage.
If you're able to stay within that 3% deficit limit, you'll have to drop some of the other more important, probably more critical items in the budget. So to me, primary education is more important than tertiary. It's basic. It's a basic human right. Whereas people in tertiary education have already had probably enough for them to get through in life. Those who need the subsidy most might be deprived of more important funding.
And if we don't find the money for it, could this derail
that
the
means that
program
long-term
entirely?
human capital development of the Philippines will be compromised. That we just basically gave more money for those who can actually afford it.
And so implementation, as with everything, is really key here.
Yes.
All right. I'm running out of time, gentlemen, but I do want to jump into one last topic, which is the infrastructure program. We touched on it earlier, but there's been a fair bit of debate about the hybrid PPP scheme, which the government is trying to push. The private sector feels like they're getting, shut out of the program. Moody's, I spoke to them recently, and they said that changing the financing mode doesn't necessarily fix the underlying issues, like, for instance, right of way. What do you think? Do you get a sense that the infrastructure program is moving fast enough?
Well, to be hybrid is fine as long as it's in the areas where the private sector wouldn't want to step in. And then, of course, the usual PPP should still be running as it had run in the last 6 years. So it's fine because nobody's going to do it anyway. But to insist on hybrid on everything, I think it's a little bit too much.
In what sense?
In a sense that we've seen that, especially towards the tail end of the previous administration, that PPP works. And the private sector can run these projects very efficiently and very low cost. The bidding process became less inefficient.
That's just what I was going to say. Wasn't the complaint that
they learned towards the end. There was a learning curve.
Was too long, something like 12 to 18 months?
There was a learning curve, and we think that at the tail end, they already started to perfect the process. Now, to stop that altogether is, I think,
and change the mode altogether.
Is not efficient at all.
Well, this is sort of a shift, right, from the usual PPP before the previous administration. But I think also I'm hearing a lot of proposals now that are readily not in the program of the government. So I think it's actually really good to this particular shift, if you want to see hybrid, but it's more of a shift because it's more of the ODA types rather than hybrid ones. But I see much more of the private sector getting more involved. Wait a minute, we want to be involved. I think it's, in a way, that's a positive thing because they've seen it in
they're
the
being
past.
challenged now.
They see the what's happened in like what Sir Jun said about them perfecting already, and then thinking that, hey, we can do this. So I think that's what's pushing them as well to get in and be more aggressive that way.
But at the same time, June here isn't quite convinced that that's the right way to go for all of the projects, at least. For some, yes.
As long as the mix is well balanced, where the private sector doesn't want to go, they can go hybrid. No? But not on everything. I mean, you can't go hybrid.
Not a one-size-fits-all approach.
It's more appropriate to have the private sector involved.
All right, fantastic insights, gentlemen. We're going to have to leave it there. At least we're closing off on a positive note, 6.5% for 2Q. Carlo was right on the money there. June Neri, lead economist for BPI, and Carlo Asuncion, chief economist for Union Bank. Thank you very much for your time this morning.
Glad to be here.
And that is your first snapshot of this trading day. Together with JP Ong, I'm Regina Lay. Follow us on Facebook and Twitter at Bloomberg TV PH. Thanks for watching.